Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. And looking at the markets, the bears took over yet again today. 2 days down in a row, guys. So after last week, we saw that break of this high up here at 11,950. Rolled our way up into what looked like it could be, after Friday's close, a high base formation. Open on Monday. Open on Tuesday. So bears kind of coming back with a vengeance, dragging it down and into these lower support levels. Now, here we go. We could be setting up somewhat of maybe a potential head and shoulders type pattern, especially if we get some sort of a bounce tomorrow. If so, look for maybe a retest of this 11,950-ish area. To the short side, though, you'll be looking for something back below 11.6 in the trading itself. Now, this big push down that we've seen the last couple of days, it's been pretty major. I know it's put a lot of people, maybe back on their heels a little bit from a bear standpoint. But let me just reiterate that we've been basically up since the beginning of October. So we've moved up, sideways, up, but there hasn't been any kind of really major pullback in the markets in quite a while. So not surprising to at least see somewhat of a pullback, maybe for the next few days even. If we look at the daily here, you can also see that big push from the beginning of October. It's basically straight up into this 12,200 area, where now we've pulled back into this really strong support, sitting right in and around the 20-day moving averages. Those will be the areas to watch tomorrow. Once again, leaning more towards that 11.6 short. If you guys are looking to get short, if you're not already short, below 11.6 would be the next area. The next larger then area below that is 11.4. That'll be a very interesting area to watch as well. So if you're in 11.6, you're going to want to take some profits, take a little bit off the table here at 11.4. I think that's the next logical place to be looking for some sort of a stop, break, pause, whatever it might be within the markets itself. You'll notice that last week we broke the 200-day moving average, held there on Friday, only to see it come toppling back down then over the next couple of days. The pressure's been good. The internals have been good. Everything looks really fine so far from the bear standpoint. But I want you guys to keep in mind that we were up most, if not all, of October. So this pullback is actually really good. It's actually really healthy as well for the bears to bring this thing back down. If it'll stop within these levels down here, it'll also make for a extremely healthy pullback for the bulls as we come into the holiday season. I'm having a very difficult time reconciling that we won't end up going up in and through the holiday season. So, with that being said, I'm looking at this as maybe just the top of a, some sort of a maybe major A is what I would call it. If you guys have been following me at all, you know that this could have been here the bottom of a move. Now this is all part of a correction, and we're not done with the correction. The correction doesn't end until we're in and through Christmas. So I'm a little ahead of myself here. I'm kind of speculating right now, but it's the look and it's the feel that I like the best, and that would be this is a big A of the correction. Then you get a B part of the correction. Then you get the C part of the correction, which takes you back up again. That's when I think we would be ending our Christmas run, if and when we get above that area. Point being, back above 11.6 or back below 11.6 tomorrow would be a really good place to get yourself short if you're not already there. To the long side, I really don't have anything for you right now just because of the action we've been seeing the last few days. Would rather you just kind of sit back and wait on the long action when it comes to the indices themselves. NASDAQ, I don't like to necessarily short, so a long in the NASDAQ isn't really all that scary to me. So long and short coming into tomorrow for the NASDAQ above 23.25 and back below 22.75 for your long and your short entries on the NASDAQ itself. It was actually in a very nice consolidation right in through here and right back into this heavy support sitting in and around that 2300 area. So we're looking for a break of that 2290, 2300. We watched that on the way back up and took some trades on the way up and into this level, and now you can see we've basically wandered our way. One thing I will say for the bears, when they get going, they really pull back hard. In this case, look, we were up, we were sideways, we were up, and now in the last 2 days, we've come back into this 2300 area. We entered the 2300 area right around the middle of October. So, what took, 2 weeks to finally get up and out of took 2 days to get right back into, and right to the lower part of that nonetheless. So tomorrow you're looking at a couple of different levels, 23.25 long, 22.75 short on the NASDAQ. As you see the daily here hanging out and above just barely the 200-day moving average, adding strength to that move back below the 22, call it 75, 22.85 type action coming into tomorrow. You can see the huge run up by the NASDAQ. Now showing us a little bit of weakness at 2.6% down. Still nothing real major yet. This one doesn't really start to concern me till we get back below this level here. So if you like to short the NASDAQ or don't have a problem shorting the NASDAQ, those are your levels coming into tomorrow for that particular pullback. Would love to see something back as deep as the 22.25 area. Don't know if we'll get that, but would love to see that. I think that'd make for a very, very strong pullback in that case. NASDAQ weekly, same thing. It's all poised right here above these moving averages. You've got the 50, which was broken about 4 weeks back. So we had this break right here. We closed above it, and then we held last week, and now we're back to it. Will we hold again? I don't know. I'm not real concerned about it because it's Tuesday. These things don't close till Friday. So whether or not we even get below here doesn't make a big difference. It's all about where we close by the end of the week. Just keep in mind that we are poised and sitting right on top of a couple of very strong moving averages here at the 22.85 level and the 22.65 level. Make sure those are, at least that 22.85-ish area is cleared before you start looking for your short. SPX 60 minutes, same type of story all the way from October. Up, sideways, up, pullback, up, sideways. This looked like a potential high base on Friday. No move to the upside. Once again, gap down, then gap down again. And here we are quickly erasing everything we had kind of done since about, well, I'd say more towards the end of October, if you will. So you can see where the Dow's a little bit deeper here than what we're seeing in the SPX currently right now. Anyway, point being, once we broke into this area, we were here for quite a while. One big hard run up here. And I had kind of told my newsletter people, it just feels like we're being sucked into something here. So we were very, very cautious with all of our long trades. It's been a good week since I've done a video for the daily viewers. So it's, I think I did mention, if you're going to go long, that's fine. Go long. Just be very, very cautious about your long positions. Make sure you're managing them. And I didn't really recommend holding overnight necessarily. But we have had now this hard push back into this 1220 area. The next bigger level is 1200 to 1190. This would bring us right back into this lower level here. That's the one I'm really, really starting to watch hard. If we bounce, look for the potential for a head and shoulders type pattern. It'll be on everybody's chart. You can rest assured of that. But as it stands right now, and based on what I saw kind of towards the end of the day, would not be surprised to see us just go ahead and continue to the downside from here and get back into that 1200 1190 type area by I don't know. I'd love to see it all in one day, but it might take a couple days to get down there. Point being, anything back above 1235 and below 1215 are my entries, both long and short, for you on the SPX into tomorrow. It's poised 1 point above the 20-day moving average. So 1215, a very, very nice entry there as well. And you can see, claimed the 200, held it for 2 days here in a row. Right back below it, and now completely gone. Looking for confirmation today. We got it all today. As I said, the market internals were stronger today than they were yesterday, so only adding to the validity of this move to the downside. I think a lot of stops were definitely getting hit in through here as people started to see this market continue to wind its way downwards, along with the news and the markets and everything else. It combines all of that with the trader psychology that you see. Point being, we stopped right at a very, very, very logical place, right on top of the 20-day moving average. This is kind of the tune for almost all of the indices out there. So this will be the tune going forward. Watching for this to be breaking down into the 1200 and or the 1190 will be your next lower levels of support. Look to maybe take some profits at those levels if you do get short. VIX way up today, 16%. So over the last few days, the VIX spiking right back and above all these levels. We had been watching this for the longest time. The VIX hanging above 30. Between 30 and 46, coming back down into the 20 mark, started to get me a little bit more on the complacent side, but we never made 20. I really like it below 20 for ultimate complacency. Obviously, we never saw that. Huge bounce off the 200-day moving average right here, and now we're right back up into the extremes. This is huge moves in the VIX. It's been very good for you put players. Any of you that have been in puts have probably really, really benefited from that. the last few days. Now, this is the weekly. It's not the end of the week, so we'll see where this ultimately finishes, but it is up 41.74% in a week. And that would make of, let's see, yeah, 2 days. So we'll see where this ultimately finishes by the end of the week. However, huge move. VIX completely confirming what we're seeing in the markets. FAS on the 60-minute, we had some entries here, but I think a lot of them got gapped on. Here we kind of fell down back into this 1450-ish, 1460-ish level, stopped there, and then you see the gap today. It's hard to play this, almost impossible, really. You kind of up and down and back and forth a little bit. I've been long TZA with the newsletter guys for about a week now or so, and it really paid off today with that big move that we saw. I think we had to cost average on that. But I think my cost average was 31.50. Some people were as low as $30 on their cost average on the TZA, and we got out of a lot of that at the open today at 34. So we did really well on that trade. But when it gaps like this, the point is, if you're not already in, what do you do? If I wasn't already in TZA, I'd have missed that entire move. It's really difficult. So when you get these gaps like this, guys, don't be too frustrated by the fact that, oh man, I wish I'd have got short today or whatever. Some of it you can't help. This is one of them here. You gap down and then it's just kind of sideways all day long. And unless you're already in, it's too late. It's really too late. Anyway, from this point forward, let's just take it for what it is. Back above 1350 long and back below 1225 short for your next entries in FAS. From a daily, it's the same story. Look, we came plunging back into these moving averages back here and finished at around on those particular moving averages by the end of the day. So if there's any kind of a bounce tomorrow, look for these moving averages to hold. But once again, back below these areas, 1225-ish or so, should give you another opportunity to the short side. You could probably even get short at about 1250. Kind of run that a little bit, and you'd be able to pull a little bit out of that if you like to go short the FAS. On the flip side of that is, of course, to go long the FAZ. This one here played this was kind of a throw over here. So at first it was a break of this particular channel. Love this channel. Just really, really gorgeous. Last week, though, we broke it and hung around below it. Once we popped back into it, gave some opportunity to kind of start kind of filling yourself long a little bit on this. And then yet again, if you weren't already long from yesterday, you didn't get anything out of it. FAZ gapped up today, ran sideways. However, if we do get a nice, decent push up tomorrow, okay, if we don't see a big gap down or a big gap up, I really do like this thing back above 45.50, 45.25, somewhere around in there. I really do like this thing long. Taking that back into the 47.48 mark, I think is very, very plausible. It just feels to me like that's where it's being pulled. So if you can get in above that 45.25, 45.50 mark, I really think there's a good maybe $2.50 in this trade. Be watching for that tomorrow. Let's just hope it doesn't come on a huge gap. That's what's killing the entries, is the fact that you can't seem to get in on anything that's pushing up and through or pushing down and below certain areas. They're just gapping right now. The market's been very volatile the last few days, and you can see the volume just picking up in a big way over this last couple days of trading. From a daily, same type of story here as well. Big I don't know if you want to call that a hammer. I suppose you could. I'm really not that picky about how to label these things. The point is, it's a big doji candle on the day, huge volume accompanying it. So down a little bit, up a little bit, but overall, nice big push to the upside so far. So once again, back above those levels. Love that. Back into this 47, 47.50 area. Any retests of these would be a brilliant place to look for a little bit of profit taking. As for drops to the downside, I don't really have any short for you on this one. It had to get kind of speculative, and I'd really rather not get into that right now, so we'll let that go for a couple days, but I do have a long play for you there. Okay, that wraps it up for today's video, guys. Just watch these lower levels. Okay, new levels there. Watch for breaks below them. Hopefully we don't get gapped on too much tomorrow and are allowed to kind of sneak our way back into some of these trades, because they are really, really nice trades and playing out very well so far. So the Bears have had it for the last couple days. Let's see if that'll continue into the rest of the week. I like it. You know what? I don't care if it's the next heavy push down. I don't care if it's a corrective wave down. I just need to know that it's down and play it that way for the time being. and I can always change my mind and switch from my bear hat to my bull hat later on if I want to. The point being, love what I'm seeing from the Bears. Good for them. Finally, some real motion, some real movement from the Bears instead of this sideways action or this small downwards move followed by heavy buying type stuff that we saw all of October. So welcome to November. Let's see if we can get some bearishness here, at least for the first half of the month. And then I'm still kind of expecting that Christmas holiday pop coming into the end of November and through December. All right, guys, we'll be back with you. Hopefully I can do this again on Thursday. See you then.